everyone. Welcome to CRE Power Hour. We're here to uncover trends, proven strategies, and share success stories in the field of commercial real estate. And I'm here with my wonderful co-host, Stephanie Gillison. I'm Lisa Marie Wand, and we're here every second and fourth Wednesday at 11 a.m. Pacific Standard Time. We're so excited to have our guest today, Briana Berg, who hails from Eastern Montana. I don't think I've been there, but Stephanie's going to introduce her, and we're going to talk about business valuations today.
Well, I love this, and I'm excited about today because look, we've been in this business for 25 years, each of us, Lisa Marie, and we both know what it is to sell a business, and we know the right process to go through. But I run into brokers and agents all the time with the opportunity to represent businesses, but they don't understand the first thing about how do you price that business. Well, that is what Briana is here to do today as a certified valuation analyst, and I'm going to let her get into her credentials because she's more than just the typical valuator. So Briana, welcome. Thanks for coming here today and teaching us all about what it is you do.
Yeah, thank you for having me. Yeah, so I am a NACFA certified valuation analyst. So we really take three different approaches to valuation. We look at it from an asset perspective, an income, and a market perspective. So we really try to provide a comprehensive valuation to our sellers and buyers looking to buy.
So you hear a lot about the asset approach to valuing businesses and also the income approach. And sometimes you will take a percentage of each to come up with a value, which would you consider that to be more of the market value? That includes the intangibles and what's happening in the market at the time. Can you talk about that?
Yeah, so truthfully, I try to stay away from from the asset appraisals. At that point, I feel like it's more that they are just equipment heavy business, or they just don't have that cash flow that's there to value the business off of. I try to more focus on that income approach and market approach. Market's more based on everything that's happened in the market already. So things that have taken place, so we can see kind of on average what companies in your industry are trading at, and then also kind of assess what that high multiple is. Income is more determined by like your cash flow and taking that and comprising like a cap rate. And that goes through a variety of factors, your depth of your management, the size of your company, your local economy, your product differentiation. So we use all of that to apply to your cash flow and, complete a value based off that. Does that kind of answer the question?
Yeah, it does. Because, like at the IBBA, and because we're on the other side of it, Stephanie and I listing businesses for sale, they talk a lot about income and asset, and then we bring market factors into play. And so I get people that say to me, well, don't you just apply a multiplier to our business? So how do you, for the business brokers out there and people that are watching interested in selling a business or learning more about the industry of being a business broker, do you hear that statement too? Like, what's the multiplier? How do we just figure this out? It's not a big deal.
Mm-hmm. I hear that all the time. I hear all different kinds of rules of thumb. I hear 2 times revenue, half of revenue. I hear all of it. And there are definitely rules of thumbs out there. There's like a business reference guide that I use just to kind of provide a sanity check at the end of my valuation. But it really depends on where the company is performing against the industry. And I think that's kind of where I spend a lot of my time researching what are the factors that make this company more valuable than the next company. Because I think the one thing with market approach where you can get in trouble is there are so many companies selling and trading in your industry, but most of the time, it's hard to say this, but most of the time, small businesses aren't making a lot of money. There's a very small percentage that actually have a lot of cash flow or making a good profit. So you really want to be mindful of that when you're going to value a company. Are they performing at industry? Do we want to take what the average is, or are they a little bit more valuable and we need to do a different approach at that point?
Well, and Briana, we use you on probably a daily basis, I think, in our business. Briana touches every single one of our come to market or decide whether if we're going to go to market more or less, because not every business is sellable. And we don't know that until you've done your entire report and analysis. But let's walk people through what all information, because it's not just the financials. You ask a ton of questions as you're trying to uncover what value is there. So can you step us through that process?
Yeah. So when I first start working with a seller, I usually have a document request list. So we go through tax returns just to verify that the financials they're providing match. But I also want to see things like your organizational chart. I want to see the hierarchy there. That's what I was talking about, the depth of management. I want to see payroll summaries. Sometimes what an owner is paying themselves is below or over market value, and that really matters when it comes to valuation. And so just for example, if a owner is overpaying themselves, we can add back that money to the bottom line, and it actually looks then more like your company is more valuable. So what we're trying to do really is, we call it adjusting the income statement or the financials, is we're trying to find the true earnings power and how you present your income statements, maybe over or undervaluing what you're actually at.
I can tell you right now, Lisa Marie pays herself way too much.
That's because I'm worth it.
It's worth it.
I'm worth it. Okay.
And I was just saying to these gals that I've been on the other side too. So I understand those things, right? We do tend to pay ourselves more than market value. I've met a lot of owners though that haven't been paying market value either, though, which is surprising to me. I'm like, why are you doing this? It's so much work if you're not, compensating yourself enough. So looking at those factors, and I think the one thing that's great about, being a CVA is they teach you where to find those things. You're kind of almost like an investigator at first, because when you look at that income statement and you ask a buyer or a seller, what can we add back to this bottom line? Sometimes they're not even remembering the things that they've done that would be like a one-time expense, right? So we kind of do a trend analysis and we say, okay, your marketing across the board, it was higher in this year, or repairs or maintenance. What happened in this year? And they can say it was a one-time thing, a fluke, and it could be like a $20,000 add back to the bottom line, because that's not an expense that you're going to incur all the time.
That's right. And that's where this is where you become so much more valuable than just coming up with the valuation and what something is worth, because you're digging in like that investigator approach, to where we've had several businesses that, look, every single buyer is going to want to see the last 3 years of financials. Okay. And you might have a business that had to do a lot of remodeling to multiple different stores where the expenses were extreme, and that could scare a buyer off. But when they see that marketing offering memorandum along with the value and how you were able to add all that back in, it becomes extremely valuable, not only to that buyer to remain interested and possibly investing in the business, but the banks want to see that. The vendors, if they're going to finance, it's exactly that process that they need to see, that we've been able to utilize your services to not only come up with what we're going to price a business at, but to also get it underwritten properly at the lender level.
Mm-hmm. Yeah, and I think that's also what's great about evaluation, is it does provide justification for the value. So when we, write our reports, we're also saying this is what we noticed, and then this is why we did this, and this is why we didn't do anything with this. It's the same questions that a buyer is going to ask when they go through your financials. So you're kind of already doing the due diligence up front, which I think is great for a seller, because, you don't want to do that later when the deal is heavy and thick, and then they discover something and the deal falls through because of that.
That's right.
Mm-hmm.
And what are your thoughts about, because for a lot of people, their business is like their baby,
Yes.
Their fur baby or their human baby. And because they put so much love and time and energy and probably sacrificed a lot of other areas of their life to be a business owner or to grow a generational business, let's say. What's your response when they're like, well, I could be doing this much, I could be doing all of these things? And I'm saying to these people, if you had the energy, maybe you're just at a point where, you don't want to do it anymore and someone else can. But that's not reflecting in your financials because you're not actually doing those things. They're great ideas, but it's like, when you're over it or you're burnout or, there's so many scenarios. Talk to that, how business owners are like, well, the potential earnings, but potential is not actual.
Yes, right. So when we do valuation, we're going off historical performance, everything that you've done up until that point.
Yes.
What I think is great about brokers is that you're selling the upside. So all that potential, those are good or great things to know, but then it's in the hands of the new owner to implement those things. That's what makes it more attractive. That's what makes it more sellable, but it's not actually creating value. We're looking at everything you've done to that point.
Yeah.
Does that make sense? And I get it though, because like I said, I've been on the other side where I was, the business owner, and you do have that emotional attachment. And I try really hard to be empathetic in that situation because I've been there. I get it.
Yeah. I mean, business owners generally work a lot of hours unless they're absentee owners. And one of the trends that I'm seeing, at least in the Western United States where I live, is that people are looking at purchasing businesses where they can be absentee owners in lieu of purchasing investment properties.
Mm-hmm. Yeah.
What do you think, Stephanie, what do you think about that? Are you seeing the same thing in your area?
We're seeing that, we've got a trek tomorrow. I say we're getting in the car and going about 4 hours to take a look at something that is exactly what you're talking about. And I know that it's going to come to market and we're going to have multiple offers because it's everybody's dream to put their money into something that takes very little effort, very little overhead, to then turn around and 5 times their money in a moment, right? And so those are what people are wanting to do because you don't have those headaches. You don't have, those nightmares of having to manage it or find the right employee that's going to manage it appropriately. And so, and I think too, when we've had both sides of businesses where we've got absentee owners that spend less than 5 hours a month in or on their business. And then we have it to where without that owner, there is no business. And those are the hard ones to sell because they're the hardest people to replace. And Briana, when she's analyzing all of this, she does a really good job at, okay, well, here's the multiple for you because who's going to replace you? How much is it going to take and how long and at what cost is it going to put you in a different form in that business to keep it running as well as it does today? Because very few people, very few business buyers in our world want to buy a job. They want to buy cash flow.
Yes.
Right?
Yes.
Right. Mm-hmm.
Yes. Buy cash flow, or some of them that do want to work are buying essentially like they're stepping into a paycheck, right? Or or an annual salary. And when you, especially in the technical trades, like I've had a lot of like custom staircase, specialized wood flooring from all over the world, or glass manufacturing, like special glass manufacturing, stuff like that. There's not as many people going into these trades anymore. A lot of those people are doing something else. But then on the flip side, you see people that have been in the tech industry and working for a big company, and they're like, oh, I want to learn a trade and then, get into this business. But it's kind of interesting because I would think that maybe some of those businesses aren't as sellable because there's not enough people to replace the information and the technical art of what they do. What do you think about that, Briana?
Well, I think, going back to the owner operator versus the investor, I think valuation, what I'm seeing is you can use valuation almost as a benchmark. I've seen a lot of owner operators who do think that their business is worth more. And but what I show them is we present that value a little bit different to an investor versus an owner operator. what they can do is go get their company ready to have that investor come in and purchase at a higher multiple. So that's kind of where we have that consulting aspect to what we do too, is we say, you can go do this, this, and this, and get your company to that point so that you can reach this valuation and have it investor ready.
Yeah.
So what about people like this specialized glass manufacturing company that I was talking to recently? It's kind of a dying art. And so for them to go out and find someone to replace them so that an investor could come and buy it, I see as a bit of a challenge.
Yeah. Okay, sorry. So explain it again. The owner operator is selling.
Right. And then they want to exit, but they're in a field where you have to have specialized technical knowledge, to manufacture glass or create a custom staircase for a home in Lake Tahoe or something like that. It's not like you have a machine and you can just push a button. You need someone with years of experience. And I just don't see as many people going into these dying trade businesses. So what would you say to someone that has a business where they're a key person and they don't want to be there anymore?
So I think at that point that you're wanting to find somebody a larger company that sees synergistic value in your business. And so that's kind of, I think, also on the broker to kind of find those buyers. My husband is a broker, so I see him do this all the time, but finding a bigger company that already has the manpower that can go in there and put somebody in place to continue to run the business, or they're just acquiring at that point. So I would say synergistic.
Yeah, I totally.
Oh, go ahead. Sorry.
No, go ahead, please. You're our special guest.
Yeah, synergistic value, definitely. So that's usually when we're doing valuation, we're doing like a fair market valuation, just based on everything that's happened in the market. But from a synergistic approach, when a company can go in there and say, I can cut cost here, here, and here, that's more of a synergistic value. And you can usually get more, a better value or higher value on your company at that point too.
Yeah.
Yeah, well, that's exactly what we came up with in that case, was to go out to other glass companies that were buying from them that maybe want to bring that symbiotic piece of the business in-house.
Yeah, and that's a lot of times what ends up happening, and why, having a business broker, involved in the transaction, because we did this with a hardwoods manufacturing facility where they literally had over 8,000 templates of trim, custom moldings. And look, there was a lot of buyers for that business, but the first thing everybody wanted to do was say, okay, let's take the 7,000 or 8,000 down to 100. Like, they didn't need that many SKUs to be able to make, because that's why it was a great business, but it was not cash flowing at the rate you thought it would, because it took them too long to be so custom, right? But once you took all of those SKUs away and you focused on, okay, what is the highest selling? And if you only made these, how much more could you make and sell? It like five times the volume of production at that point. And, everybody, that's the one thing about businesses that, look, when we take pride in something, we want to keep pleasing, right? We're the people pleasers or the consumer pleasers, whoever we're providing product to. But sometimes it takes us or Briana to say, okay, hold on a second. Just because you have 8,000 opportunities of what somebody could choose from, how many times this year did you make each of those? Right. So just different perspectives in how we look at things and how we can then bring that value up. So
that makes total sense.
Yeah.
Briana, did you get into the valuation business? I heard you say that your husband's a business broker. Is that kind of what drew you in? We want to hear a little bit about your story.
Yeah. So back in 2022, I went to go sell my company. And up until that point, my husband and I, we actually sold a landscaping company prior to that, but it was more on an asset purchase, or just essentially selling off the assets. This time around, it was, a little bit more complex. I owned the real estate. I had an operating Airbnb out of that location. And so I just felt like there wasn't a lot of resources. I didn't really know where to go. I went to my CPA, and I think that's, where a lot of people go is to their CPA. And usually they're not going to know as far as a methodology to apply and value a company. I see more and more CPAs now doing that as a bolt-on, but at the time I just felt like my lawyer couldn't, give me a lot of insight there. And so, I was like, if we're going to continue to, build businesses, I kind of want to know how to value them, right? So it was really out of vanity for myself. I wanted to know how we could value our companies if we're going to build them, and I want to exit from them and make some money. And then also my husband, his dad, he had a store that was doing big numbers, and I knew that that was way different than anything I had ever done in my business. And if he wanted help with valuing that, I wanted to be the person and resource for him. So we found NACFA, and we decided that I was going to go ahead and get designated, and so that I could go do that and offer it for other business owners as well. So that's kind of my story. It's kind of a roundabout way into getting into valuation. When I was in my courses, I was the only non-CPA out of 40 in my class. So a little bit untraditional in the way I got into it.
But you do a great job. Talk to us. I mean, obviously you do our valuations for, any business that we're bringing to market, but talk about other clients you serve. Like, who are they? What are they? What are they doing? What do they need the value for?
Mm-hmm. So I primarily am working in the exit space. I mean, you can get valuations for multiple reasons, whether it's disputes, so marital disputes, partnership disputes, if you need to go raise capital and attract investors. So far, I've really only worked in that exit space. I feel most comfortable there, but that's the fun thing about valuation is I get to learn the ins and outs of all of the businesses. The methodologies, it's universal. So everything that I apply and that I look for is the same, but I get to kind of learn the nuances between each business and each industry. And so that's really fun for me. I love that.
That's awesome. And if need be, your valuations hold up in court, right?
Right. I actually did just take on my first marital dispute.
Oh, I bet that had some good stories along with it.
Yeah, that's a whole nother arena, because you have to be you're already objective anyways, but you have two parties involved, and it's a lot more complex, and you have to be very careful about how you approach that. And you also have a lot more standards you have to uphold, when you go to do those. And the level of reporting is just, my typical valuations for just a exit sell is maybe 10 pages. For those, it's 40. So it's just much more in depth.
Were the husband and wife talking?
Oh my goodness. There was a lot of back and forth, and then we came together at one point, and they talked, and they were very respectful to me, but man, you could cut that tension there with a knife. It was pretty I didn't really want to be there.
You had a husband and wife. The husband was in the dental industry. He was the sole owner of the business. And then they had a building that they co-owned, and they wouldn't be on the phone or video or in the same room at the same time.
Oh, wow.
And I made the decision that I didn't want to put myself and my team in that particular scenario, because I just didn't feel like we could come up with a winning communication strategy. God. So when you have people that are kind of upset like that, years ago, I had a big bowling alley for sale with the real estate and the bowling alley. Mm-hmm. And the reason they were selling is because the husband was having extracurricular activities. And so they have this huge property, right? It's ginormous. Bowling alleys are huge. And it was just like, it was the strangest thing, coming in at different times. And so you not only do you get down into the numbers and the nitty gritty of the business, there's the relationship piece of it that's important.
Right. And who's handling the relationships between customers and all of that stuff too. Yeah.
Well, it's for all of these reasons, because obviously we're on the exit, people looking to retire, they've built a great business, but we always do third-party valuation because it's objective, right? Brianna's not in the transaction. She has nothing to gain from the transaction other than to give us that proper value, that's certified and so forth. But it helps with that transaction because, again, we can use it with the lender, we can use it with the buyer, but also too, when a business isn't worth what it's worth, we're never the bad guy. She is.
I love that. She's the bad person.
Yeah.
She's the angel or the devil. But guess what? It keeps us in the clean space.
So talk to our audience that's watching live or that will be watching our recording later. Where you come in. So let's say Stephanie or myself have a new client and we're working with them and gathering documents. And then do you come in and do a separate valuation, charge them a fee for that? Or does that come out of the sale? How does the dynamic work?
Yeah, so I have a few different types of referral agreements because I'm working with a few different brokers. So it's a kind of unique compared, they kind of present me what they would like to see. But, when I'm working with Sam, Stephanie's husband, I'm there right at the beginning. So they're collecting the documents. I get to go in, I get to view the documents. And I'm doing, like she said, that upfront assessment to make sure it's something that they want to take on.
Yes.
So I'm there usually right at the beginning, and the same for my husband. He always sends them to me first, and I'm actually collecting the documents at that point and doing the assessment. And then he takes it from there and says, okay, based on this, is this what you need for your next chapter? Is this what you feel good about going to market? And so those things, I'm usually right up at the front there.
That's a really great idea. And it's a good strategy because like Stephanie said, they're going to get a neutral valuation. And also it's part of the benefit of having it be neutral is besides Sam or Stephanie don't have to, take on being the bearer of bad news or good news or great news. Also the fact that it's neutral, it could stand up as its own document in court or in a with a lender, with a buyer in any situation. So I think that that's a great idea because like Stephanie said, a lot of times we're wanting to make our clients happy and we don't want to be the bad guy. Like I always talk about this is what the market is telling us. I don't want to say this is what I'm saying. Here's what the market is saying. The market is rejecting your price or your property or your business, or it's not. It's priced appropriately. It's being marketed appropriately. So that's great.
Well, and I think anymore going off your gut, it's just too risky, number one, to go off the gut and make that seller happy, because if it's not worth it, it's not worth it. No bank's going to lend on it. It's never going to trade. Nobody's going to make any money, and everybody's going to leave that party very unhappy. And I'd rather have zero business than to have really unhappy people that dislike me for it. Right. And so that's why we bring Briana in the very beginning, because it's worth our time, effort, and money to have her do what's necessary to make sure that we're utilizing our time the appropriate way. There's only so many hours in a day. And that's the one thing, Lisa, that's the one thing I've never been able to fix, right? Everything else I can fix, but there's never enough time. And so if you only have a certain amount of time, you have to use that time wisely and take on businesses where you have reasonable sellers, where they're sellable, and where everybody agrees up front on what that value is. Otherwise, it's a complete waste of your time and you'll never get it back.
Yeah, right? That's so true. And it's that I call it leverage. So you're focusing on the things that you're good at, and then you're leveraging out the types of things like Briana, like what you do, so we can focus on the client relationship, making the deal move smoothly. And if someone's not going to be happy, I'm the same way. Stephanie, you and I are on the same page. When I talk to clients, I'm like, I'm going to be checking in with you every week, and I don't want you to be upset with me if your business isn't selling or your commercial property is not selling, because that means that there's something that needs to be addressed, right? That's larger than just the conversation. There's an issue there.
Yes.
Yeah. I think I can kind of serve as that vetting process for brokers, just it's essentially vetting who you work with.
Yeah.
Yeah. And, going back to what you said, Lisa Marie, I love what you said, that you almost outsource the parts that you aren't good at, or your weaknesses. And it's the same for me. So I'm super analytical and I'm all in the numbers. For me, it's hard to go sell valuations. So that's why it's nice to work with brokers who that's all their sole focus on is to find clients and to sell those things. So I'm literally just on the backside of things, and that's where I like to be.
Well, and that's a good point that you make, Briana, because I was working with a client up in Tahoe, and they said, someone came in and sold us a $12,000 valuation on our business, and then they came and brought us this book, and then they're like, so now what do we do?
Mm-hmm.
We have a valuation,
but what do we do?
What do we do? Like now, okay, it's like we can put it on the shelf, and they looked at that as a not a really value add service. So when you package what you do with business brokers like Stephanie's team or my team, then that makes so much sense. It becomes just a value add process from the very beginning. Mm-hmm. And it makes it easier to say yes or no, because I'm like, if everyone's my client, no one's my client. If I'm trying to sell everyone's business or commercial real estate project, then I'm spinning in circles, like Stephanie says, because we're taking on clients where maybe this is not the right time for them to sell or to invest in an opportunity. And I tell the people on my team, our job is never done. So just go home at some point, because
we'll be there tomorrow.
This is awesome. I'm so glad you came on here today, Briana. It was great. I love it. There's so much more that goes into it. And look, the number one thing I learned a long time ago, so did Lisa Marie, is we don't play a role that we don't need to play. And that is what you do for us with the valuation. And I don't even want to be certified in valuation.
And I'm so glad you told us up front you were a nerd, because you don't act like a nerd, but I love the fact that you love the numbers, the analysis, the spreadsheet. And thanks so much for being a fabulous guest today, Briana.
Thank you so much, Briana. Bye, everyone.
Bye. Thanks. Bye.